Good afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve, joined by news editor Ed Carson. We'll talk about another very volatile session in the stock market. Let's see, the Nasdaq Composite at last check down almost 4% on the session. S&P 500 down 2.8%, and the Dow Jones down 2.4%. As usual, Ed has three stocks to watch, so why don't I throw it over to Ed and hear about what stocks we're going to talk about today.
Yeah, we're going to talk about Tesla, Ken. Obviously, not the best looking day for them. Also going to take a look at Waste Management, which did pretty well today, and Cheniere Energy, which made a nice move as well.
Okay, well, it was again another very rough session for the stock market. It looks like the Nasdaq did finally move below that recent low, not by much, but we're looking for that shakeout in the index. So you see the Nasdaq here. It did undercut by just a little bit. We had I think if you owned coal stocks and oil stocks today, Ed, you were looking okay, but anything outside of that, it was pretty tough sledding.
Yeah, all the major indexes undercut Monday's lows, so that one-day stock market rally attempt is over. So it seemed like we were headed this way. The S&P and Dow haven't undercut their 2022 lows, but the Nasdaq is at a 13-month low. Obviously, things not going well. Pretty broad weakness aside from a few select areas. And yeah, pretty grim. We've been telling people, it's a market correction, you should be getting out. There was no reason to get back in yesterday, and investors should really wait for, I think, some real signs that we're at a bottom and moving higher before even thinking about getting back in.
All right, well, why don't we move on and take a look at the S&P 500, which didn't fall as much as the Nasdaq, but it was still an ugly day, weighed down by a pretty weak earnings report from General Electric. At last check, that stock was down 10 or 11% on the day. S&P 500 down 2.8%, but it is still holding above that February low. Do you think, Ed, that we need to see some capitulation? Does the S&P 500 have to undercut that February low to really get the shakeout that we're all looking for?
Yeah, we might need to. I mean, we'll see what we need, but the fear gauges, while they've been picking up, don't look as bad. Haven't yet triggered that level yet, where it seems like okay that and even that would just suggest that a short-term bottom is coming through, not that there's an ultimate bottom. We are seeing some negative action early after the close, with Google and Microsoft down after their earnings. So maybe we'll see that final push in the next few days in the middle of earnings season. But
Well,
yeah.
Microsoft is a Dow Jones component. Why don't we just take a quick look at the Dow here? It was down 2.4%. Weak earnings report in the Dow from 3M today, but there were a lot of big percentage decliners in the Dow. Nike down big, Boeing down big. But here's a look at the Dow, still holding well above those February March lows. And finally, Ed, why don't we just take a look at the VIX and see what fear looked like? That would be 0 VIX on our chart here, and yeah, so the VIX over 30, big percentage gain. Some are saying the VIX is going to have to go above 39 or 40 before we get that big shakeout in the market. That remains to be seen. But like you said, seeing some fear in the market, but perhaps not the excessive fear that we like to see at market bottoms. All right, well, why don't we start by taking a look at Tesla, which just got obliterated today. There were hopes that this was going to hold on to its 50-day moving average. It took out the 50-day line pretty quickly earlier today, and then support at the 200-day also gave way today.
Yeah, I mean, some of the news is that I think there's concerns that Elon Musk will sell some of his holdings, or may have to sell some of his Tesla holdings in order to pay for the Twitter deal. He's put up some as collateral. He's guaranteed some other stuff. So, but it's not sure that he's going to do so. Nonetheless, it came down, regardless of that situation, we know growth stocks are struggling, and Tesla's been holding up better than most. And okay, it was holding around 1,000, holding around his 21-day line. But this is an example, and there are plenty of them out there, where stocks will hold up, and then they won't. And maybe they'll bend, or maybe they'll just break like this. This hasn't given up all the gains from mid-March, but anybody who bought as it came above the 200-day, certainly anybody who came above the 50-day line, those were very aggressive. But if you did that and you held on, that's been a round trip. So, I mean, it has really come down. Again, nothing really special about the fact that everything looks terrible.
Yeah, yeah. Well, we've said in recent weeks repeatedly that even a very weak market is eventually going to bring everything down with it. And we've seen this outperformance from the miners and the fertilizer stocks and a lot of these cyclical stocks. But even the selling has started to creep its way into these areas of the market as well. All right, next up, like I said, we'd had a lot of good earnings reports today. Plenty of not so good earnings report, but Waste Management closed off highs, but still gapped up and ended with a pretty impressive gain here.
Yeah, I mean, this actually broke out partly today. It backed off the official buy point. I mean, this is a consolidations that doesn't show up handles, but this is a legitimate handle right here at 165.95. So it got above there on strong earnings. You could have tried to buy it here. Again, buying anything in this market is extremely risky because what happens tomorrow? I mean, this could outperform the market and still fall going forward, but strong earnings. Look at that relative strength line. It's been trending higher and really, is just well up there, at multi-year highs. So that's pretty strong. Nice to see that. Definitely something, if nothing else, you should put this on your watch list. Maybe put Waste Connections, WCN on your watch list. Sort of defensive names, but names that still have growth. They're not no growth companies.
Let's switch over and take a look at a weekly chart for Waste Management, because this is a setup in a healthy market where you've got institutional money coming in from the sidelines. This is a setup that has yielded a lot of pretty powerful breakouts in the past. We're talking decade after decade after decade. So this is a classic cup with handle base forming. So the technicals overall look pretty good here, Ed, in a weak market.
Yeah, and that's just the issue, though, is like it's hard to fight that tape. I mean, being a strong swimmer when the tide's against you, can this one? Maybe, because it's defensive, but it's just something that I think investors should be cautious about any purchases right now.
Okay, and then let's switch over to the natural gas area and take a look at Cheniere, ticker LNG. This is a daily chart here showing some pretty good action at the 50-day moving average, Ed.
Yeah, nice bounce. We saw energy stocks bounce back. I mean, crude oil came up, natural gas came up. Even more, though, is again, this is an LNG play, that hence its ticker. It exports natural gas, liquefied natural gas to Europe, to Asia. Natural gas prices shot up in Europe today. Russia is saying that it's going to cut off natural gas to Poland starting tomorrow. That could lead to a wider cutoff. The prices are already very high, so that signals again another reason why there should be very strong demand for Cheniere Energy going forward. This company basically, has struggled to make money, but you can see this year it is not expected to struggle to make money. We'll have earnings in a few days. That's something to keep in mind. But nice bounce here. Maybe if it got above here, you could argue there'd be a buy area. After this week, it probably will have a flat base. So there's a lot. This is definitely one people should be watching going forward.
Okay, so if we wake up tomorrow morning and we see nice gains for stock futures, and we see a lot of stocks moving, so maybe some big earnings winners, investors really need to fight that urge. Even if they've been raising cash and they see some stocks that look like they could work, it really is important right now to fight that urge and put money to work in this downtrending market, because like you said, when that market tide is decisively flowing negative, which it is now, it's very difficult to make money. So the best course of action right now is just to kind of sit tight and watch from the sidelines, right?
Yeah, I mean, you want to try to get into a new rally early, but not early. You don't want to try to get on there the moment you see an uptick, the moment you see anything happen, even one good day. If we rise 4% tomorrow, that is not enough. It's like, hey, that might be a positive sign, sure. But lots of the best days in market history come in bad markets. So make sure we have several days, a real sense that we are now getting an uptrend, not just an up day.
Well, there are definitely signals to look for, and we'll be discussing those signals most likely for the rest of the week on IBD Live. So hopefully you'll join us for that. Ed, I want to Thank you very much for your insight as usual. And again, a rough day for the stock market today. We'll see what tomorrow brings. But I mentioned IBD Live. We have a pretty good sense of what market bottoms look like and the price and volume action that we need to see. So be sure to tune into IBD Live if you haven't already. You can just go to investors.com/IBD Live and sign up. And until then, Ali will be back tomorrow along with me, and we'll see you back here tomorrow and hope for a better day for the stock market. Take care, folks.